Hello, my name is Maurice Thomas, and I'm the broker at Eagle Eye Realty. The best place to reach me at is at www.myeagleeyerealty.com. Now, the reason why I'm talking to you today is to tell you how to identify bubbles. Now, what's a bubble? A bubble is product or assets being traded at an inflated price. Which pretty much means that you're paying too much for an item, usually generated by high demand, but that demand is usually generated by wanting to make money off of it or create some type of profit. Bubbles usually aren't really detected until after they burst, but there's usually some type of common sign or something like that, which pretty much can give you a hint that that there is a bubble arising or already there, or there's potential for a bubble to come. And what's the reason for wanting to be aware of a bubble? Is because it can have a financial impact on you. You can really lose a lot of money, lose a lot of wealth, or lose out on a lot of opportunities. The most recent bubble was, of course, the housing market. And that pretty much happened with a lot of people having profit in mind and being able to move up and stuff like that. Unfortunately, that didn't turn out the way that most people thought it would. But this is actually nothing new. One of the first recorded bubbles is the tulip bubble, which happened a little under 375 years ago. So it just tells you how far back that is under record that bubbles have been going on. And it's usually caused by speculation. What is speculation? Speculation is reasoning based on incomplete facts or information. Pretty much mean that you're just buying something because everybody else is buying it because you think it's going to make money. Let me give you a newer example and what were some of the causes and what pretty much led to it, or which pretty much were the ramifications. The first one was the stock market in the 1920s. And in 1929, it led to the Great Depression. Some of the reasons why the bubble was created was because, of course, greed, market manipulation, deregulation, which allowed a lot of the people in power to pretty much manipulate the market, and the ease of debt, and to be more specific, people were borrowing on the margin for stocks. If you want to get more information about that, just go to Wikipedia or Google or Bing and look up borrowing on the margin for stocks. Another one was the Japanese asset price bubble, which pretty much had an effect on the real estate and stock market, which pretty much led to down housing market, and there was also a recession, and it took them about a decade to start to recover. Some of the symptoms or some of the reasons why that happened was, one, the ease of debt. They were pretty much handing out loans at the time. Speculation. A lot of people believe that they can make profit off of Japan because it was a very hot market at the time, and so a lot of people wanted to put money into Japan because they wanted to make a profit, and they felt that going overseas would be able to make more money for them. Deflation was another cause. Deflation is pretty bad because what that means is that all the prices are pretty much going down, which pretty much causes a loss of jobs and loss of wages, and that usually increases default rates. Another example was the dot-com bubble, which happened towards the end of 1999 is when the bubble burst. That was based on internet and tech stocks. Pretty much what ended up happening was there was loss of jobs and a lot of there was a loss of wealth as well. So a lot of people that wanted to retire or a lot of people that wanted to make money lost a lot of wealth or equity. A lot of the things that pretty much brought that upon or pretty much created the bubble was a lot of people were speculating. A lot of people were speculating and believing that these dot-com stocks will make money because of some successful stories. You know, the Microsofts and the Apples and the Googles and stuff like that, the Yahoos at the time. So a lot of people were feeling like this is a can't lose asset. So a lot of people were giving out money, and the money was very easy and easily attained, which helped fuel the fire, which is usually the gasoline. It is the debt or the ease of funds. And just pretty much a lot of people had a high confidence in this particular asset. Now the latest again was the real estate bubble, which just recently happened, and what this helped create, or a lot of the issues that this created was, you know, a recession, people losing wealth, people losing jobs, and just a lot of people not being able to obtain credit now, and maybe even deflation at the moment. Because of, you know, house prices are going down. A lot of companies are reducing their prices to bring people in. There's gas prices actually went down. Just a lot of prices have been going down lately. I'm not saying that we are in deflationary times, but we're pretty close. And this is only at the moment. Now, how can you spot a bubble? Usually the three ways that I usually suggest is the most obvious one is when prices have been steadily rising and there's no justified reason on why these prices are going up. Like, say a reason for, I mean, that doesn't mean that when the price goes up it's a bad thing, because if you look at Apple, you know, Apple came out and revolutionized pretty much the music industry, and you know how music is being sold. You know, tablets, you know, the iPod, the iPad. You know, those are revolutionary products, and it seems like that company can only go up. But usually, another thing is that's another thing you want to look at. Once you see that a company can do nothing but go up, you know, you want to make sure that it's justified. You know, Google pretty much revolutionized the internet, you know, and pretty much had a lot of people driving traffic and searching for a lot of stuff, which pretty much means that they have billions of people, you know, on their website, you know, so they're generating high traffic, which means the higher the traffic usually brings the higher the profit. You know, so it's just usually little things like that will be able to tell you whether or not it could possibly be justified. But, you know, that's just something you want to look out for, pretty much rising prices. Another thing is extremely high confidence in certain items, you know, because that pretty much leads to speculation. If somebody's like, if somebody's telling you that this is a cannot lose product, you want to figure out what are the holes in the product. How could this fail? Is this actually priced correctly? Another thing is the ease of debt or funds. If it's very easy to get money, that means that it's very easy to invest, and it's very easy to perhaps either manipulate or to speculate. And speculation and manipulation are pretty much the driving forces in bubbles. So it's not an easy thing to do, because economists can't even spot bubbles, but until after the bubble has burst. But those three things, looking for for rapidly raising prices, extremely high consumer confidence, and the ease of funds or debt. That would usually tell you, those are usually the symptoms of a bubble. I guess probably like the most recent that comes to my head is usually gold. Because gold right now is at historically high prices and it continues to keep going up. Everybody keeps saying that you can't lose in gold, but I don't know the reason why the prices keep going up and why are they going up at such, at its rate. I really don't understand, unless it could be because a lot of people lost confidence in the dollar, or people are bracing for inflation. And gold is usually a hedge against inflation. So those could be a couple of reasons why gold is going up so high, but I think gold, maybe a bubble may be accumulating with gold. But I'm not saying stay away from it, but me personally, I wouldn't invest in it. It's too high. So hopefully this video was able to help you out, just a little bit. If not, you can visit my website. My contact information is on there. You can email me and ask me some more questions. Again, this is Maurice Thomas. I'm the broker at Eagle Eye Realty. The best place to reach me at is at www.myeagleeyerealty.com. Focus your sights on your future. Thank you. Have a nice day.